What is up, everybody? Today is Friday, January 3rd, second trading day of the new year. And I took one trade in the morning and I took another trade in the afternoon. Now, the one trade that I took in the morning was with my funded accounts. The one that I took in the afternoon was just a small scalp for my evals, just to get those a little bit higher. I like to take bigger risk on the evals because they're just evals. They don't mean anything. So on the funded and my personal, I took it in this morning. So overall, coming into the market today, let's see, going to the 4-hour time frame. We had tapped into that draw on liquidity that we had here at the 21007 level. And we missed this 972.75 level. So that is very interesting that we did not tap into this level of liquidity right here, but we did take out that one and reacted out of it. Now, as you can see, we are heading higher. So my thought process here is that we're going to come up and sweep this level of liquidity and then continue dropping down. So for now, I am short-term bullish just because of the reaction out of that level right there. The lack of displacement is super key to always note, because whenever we have a swing high or a swing low, the reaction of price at that level is important to look to see, to know what's going to happen next. Because if we do get a strong closure below that, then the retracement is a high likelihood of it just being a continuation lower. But if we wick it like this retracement is not necessarily going to end up being a retracement. It is going to be a full-on reversal. And we will know that by the fair value gaps that will get either disrespected or respected in this leg on down before it tapped into that level of liquidity. So this morning, I was bullish. I was looking for a reason to go long. And if we look on the hourly time frame, we also see that overnight we invalidated this 1 hour imbalance right there. And then on the way up, there was really nothing else. So that right there just made me super bullish as well. There was really nothing that would stop us to go lower, apart from it having a 1 hour closure below this imbalance right here. So overall, I came into the market very bullish. Oh, and this too on the 15-minute time frame, we had this 15-minute fair value gap that was invalidated right at the open. The first 15 minutes, boom, invalidated that bearish fair value gap that we had never tapped into before, apart from over here. So if we were going to continue going lower, this accumulation here, I would have expected an open that would have swept this and then immediately create a wick into this fair value gap and going lower. But because we failed to do that and we had this very strong displacement candle higher, I had no reason to be looking for shorts today. I was looking for purely longs. If I was going to look for any kind of short after the first 15 minutes of the market open, it would have been a 15-minute candle closure below this imbalance right there. Why? Because then at that point, it would have been accumulation, manipulation up, and then distribution lower, with confirmation that the order flow has switched from being bullish to bearish with the invalidation of that 15-minute FEG. So first macro comes around, right? We get that big push on up. We start to retrace back into that 15-minute fair value gap. I thought that was a perfect setup. I noticed that we had this 1 minute imbalance here, a bearish imbalance, in fact. And when price moved on up and it closed literally right above it, I was so bullish on the day, seeing that we also reacted out of a 5-minute fair value gap, sweeping that low right there. That was more than enough confluence for me to go long at that level. Usually I wait for 10 o'clock, right? Especially because we had news this morning. To be completely transparent, I did not realize that we had news. Otherwise I would have waited. But regardless, I took that. It was so apparent to me that we were going to go higher because of all the things that I had marked out on the 4-hour, the 1 hour, and the 15-minute. Every single one showed bullish order flow. So when we reversed down here, sweeping that low into a 5-minute imbalance, moving on higher, disrespecting a bearish imbalance, I had no reason not to go long. And so I market ordered in, put my stop below that swing low. I saw that we had that push on up for news, and I was like, oh man, I did not realize that we had news, but if it stops me out, it stops me out. That is, I guess, my punishment, you could say. But price moved on higher. I took the majority of my, or actually I had 2 contracts in this instance, and I took one off here, and I put the other one to break even. And thankfully I did that because, as you can see, price came and would have stopped me out completely. So with it being Friday, and after already tapping into the weekly objective of the 21007 level, I just wanted to take low-hanging fruit, especially because we tried to hit that, and then here we tapped over that. I mean, we had relative equal highs. That was a pretty good reason for it to want to come back down lower and potentially sweep some more liquidity. And so, yeah, that was the first trade that I took, and this was the only trade that I took today with my personal and funded accounts and my evals too. Now, I tape read for the rest of the day. I didn't really take any of these other setups that I will go over. So that was for the first 950 to 1010 macro. At the 1050 to 1110 macro, here I was a little bit bullish and a little bit bearish. I was kind of 50-50. I wanted to see price displace above the 10 o'clock open. I did not want to see it create any kind of displacement lower, because like I said, I saw bullishness on the higher time frame. I wanted to see continuation here on the 1 minute. So as you can see, price moves on up, rejects, moves back on up, and rejects. So as we know, my entry model is always a inverse fair value gap that is aligning with the bias that I'm looking for. So if I am bullish, I am looking for price to create an inverse fair value gap to the upside. The first thing that I wanted was, because of the fact that we did have this move on down where I got stopped out, right? We had that high, we created a low, we created a higher high, but then we created a lower low. So to be safer, I wanted to see an invalidation of this 5 minute fair value gap, because I want as many of the time frames to be aligning in terms of their order flow. Right now, the 5 minute was showing bearishness, and the only way I would be bullish would be if this 5 minute FEG got invalidated. And so price moves on up, is respecting it, and then we finally get an invalidation of it at 11:05. So at 11:05, I look for some kind of retracement. Hopefully in that retracement, we end up getting a bearish imbalance. Then we inverse that, and that will be my entry. But I want to make sure that the higher time frame is also aligning. We know that the 4 hour is bullish, the 1 hour is bullish, the 15 minute was bullish, the 5 minute was the only thing that was still bearish. And that's why I wanted that 5 minute invalidation of this imbalance right here. And we get it with this candle closure at 11:05. So looking after 11:05, see if there's any kind of setup there, which I don't think there was. Yeah, there wasn't, right? We create the retracement that I was looking for, swept this low right here. The price action for the first two macros was really tough. Honestly, I would not have taken any kind of trade here in the second macro. And sorry guys for all the coughing. I'm still recovering from that cold. So I would not have taken anything in that second macro for the day, just because after we finally got that alignment on the 5 minute, and then looking at 11:05, which is right here, we get no inverse fair value gap within the macro itself. I want the setup to be created within the macro. Now there is an inverse fair value gap to go lower, but we're not bearish, right? We're not showing any signs of bearishness. So of course, if you took shorts there, which I'm sure some people did, they got stopped out. And we were holding, by the way, that inverse fair value gap on the 15-minute time frame this entire time. That was not getting invalidated, and so that further solidified a bullish bias. Now, I noted this trade here because it aligned with quarterly theory, right? We've got Q1, Q2, and I don't usually take trades until Q3, Q4, and as you can see, this setup worked out. It was a 1 minute inverse imbalance right there. Put your stop below that swing low. That swept that right there. That is considered a safe low now. We don't expect price to come down to it because it took out liquidity. And as you can see, that's exactly what it did. It never came back down. So this right here, you would have been targeting the first draw that we had, the 490.75. The other two levels that I was looking at was the 524.75 level right here, and then the 569.50 level right there. So those were the three levels that I was looking for price to tap into today if we were bullish. So this trade happens, we move on higher, right? Now we're entering into the 1150 to the 1210 macro. Now we need price to align in terms of, we've hit a level of liquidity now, okay? We've created a higher high. And we know that when we have structure like that where it creates a higher high, the high likelihood area that it will retrace is at a level of liquidity. So here, what I wanted was a drop down into premium of some sort, or sorry, into discount of some sort in this leg if it was going to do that, or into some kind of higher time frame imbalance. So here I would have liked to see a potential move on down into this imbalance right here, this one right there, or even on the 15-minute time frame, which I see that price respects a lot more. There was a 15-minute imbalance right there. All right, so price retraced into it starting, it was created at 12 o'clock. So then at 12 to 12:10, we should have seen some kind of a setup. If we didn't see a bullish setup there, then there was no setup, which, as you can see, there was nothing, right? At 12 o'clock was when that 15-minute imbalance got created, and here's the low of that imbalance, I'm pretty sure. And then price moves on up. There's no bearish imbalance that gets created here. So there is no trade to take. No trade to take. Now, this trade I marked out here was something that showed up outside of the macro, and I was showing my students that when there isn't time aligned with it, it won't work out. It just won't. And so clearly, as you can see, that one got stopped out to the tick. Insane how it got stopped out to the tick. And here we have the next macro at 110 to 140. What do we look for? We look for some kind of retracement and then a push back on up to create an inverse imbalance. Here we see that it was created outside of the macro, but we know we're holding that 15-minute fair value gap. It's getting that lower high, or that lower or higher low, higher low being created, moving into a higher high. So we had good confluence that it was going to continue going higher, especially because we have another draw on liquidity right here at that 524 level. So macro starts, we actually tap back into that IFEG right there, put your stop below the swing low, target the high of day if you want as a move to break even type of approach. Even if you targeted the high of day, that's a 1 to 1.6, so you could have taken partials at the high of day, and then leaving runners all the way up to that next level. And as you can see, beautiful straight move on up. This is what we want to see, right? If we don't see the setup in the macro, don't take it. If we don't see the alignment of the higher time frames, don't take it. Okay, we want to see price retrace into either like a 5-minute imbalance or a 15-minute imbalance, and then the setup forming within the macro itself. So that was that. And then the last trade that I saw at the end of the day was this one right here at the 315. So let me mark that out. Actually, I don't have it marked out. 315 to the 345 macro. So here, the reason why I was bearish, if you look on the 5-minute time frame, look, we've already tapped into 2 areas of liquidity, and at this point, price is going to start to retrace down into potentially a discount off of this price leg right here. Right here, we were in premium, okay? Price creates a high, a low, a higher low, and here is a failure swing high. All right, very prominent, of course. And so the fact that we are creating that, and let me go back actually, I believe there was a 5-minute fair value gap here. Like I said, I want all the time frames to align. I want to see the same kind of order flow. We tap into that 5-minute bearish imbalance right there and start to drop on down during the macro. So what am I looking for? I want to see price move down into some kind of area of liquidity, which was this right here, was a very quick one. Even this one right here, these swing lows. And as you can see, it tried to tap into this one, but obviously did not. But this is the OTE area of that swing. But regardless, to have low-hanging fruit, let's just say for the sake of this argument, right there. So you look for a bullish imbalance to get created. Here is that rejection off of that, right? It rejected off of that. And then, I'm just trying to see here. Yeah, it gets rejected off of that. Creates that bullish imbalance right there, and it's creating these lower highs, right? And then it also even creates a 1-minute bearish imbalance. So here you could have taken your entry right there, which is what I did. Put my stop above that swing high, target that draw on liquidity was a 1 to 1.4. Nothing crazy, right? It's the end of the day on a Friday. You can't really expect much, really. And price moves on higher, looking like it wants to stop us out. So we keep an eye on this 1 minute imbalance right there. You can see it holds the 50% mark of it. Wicks above it. I don't care about wicks. I care only about the bodies. And we go and we smash into our TP. And it tries to take out some more liquidity, moves back on up, takes out this high now, and then drops back down. So those were the trades that I saw today, okay? A little bit different in terms of the execution as to what I usually do, and I know some of my students are watching this. I know I usually wait for after 10 o'clock, especially after red folder news. Now, yeah, I was fortunate that I didn't see that there was red folder news. So even if I took, per se, this one right here, right? If I took this entry here and I put my stop below that swing low, I would have closed out my trade once this 1 minute imbalance right here got invalidated, right? It turned into an IFEG. I would have exited the trade right here because this on this price leg here, it is the only FEG that there is, and we move and we barely wick above that high. All right, I would have expected this to hold us to create that strong high, but if we don't get that, that's when I stop myself out because it's showing, number one, weakness at a high, and then order flow turns bearish. Yeah, I'm not in the right trade. If we ended up getting a very strong closure, so let me pull up the arrows. If we got a very strong closure above that high and then come down and invalidate this, I would still potentially stay in the trade because the structure points to a very strong push higher. Okay, but the fact that we have a very weak high and it reacts off of that, and then on the only fair value gap on this leg on up gets invalidated, then I'm out of the trade. All right, so that's where I cut my trade sometimes early before it even hits my stop loss because I want to make sure that the order flow aligns all together. So today was definitely hard. I know a lot of people got blown accounts. A lot of people were red today. A lot of good traders ended red, and that's okay. You know, we have red days. It's totally normal. Patience and waiting for the right setup is so key. For me, that first setup right here was great. Maybe even taking this one in Q3, but I kind of shied away now from taking those because I've noticed that price has been moving better within the macros. And then here is the best trade that I saw for today. I only took this one, and then I took this small one in the PM session. So those were the trades that I took today. Hopefully you guys ended up green. I hope this video made sense. It is 17 minutes long. I'm so sorry that you had to listen to me this entire time, but I hope you guys have a great weekend, and we will be all back together next week, God willing. All right, everyone, take care. Peace.